Many pundits are saying Tesla's in big trouble, but you need to remember that a lot of these people hate Musk's guts. So what we want to do is paint a clear picture of what's going on and be objective throughout that process. So we're going to review the earnings deck, press release, and earnings call transcript. Now, if you're a Tesla diehard, you might be disappointed at how simply this is presented, but that's because I'm a very simple person. So I opened up Futurism a couple days ago, and I looked past this main topic on their page about Cybertruck's terrible range, and below that was a piece here, Tesla is in trouble. And this sentence, one of many criticisms in that piece, says, with the company's core business of selling cars seemingly on the back burner, okay, the mercurial CEO is now trying to spin up new sources of revenue. Well, they also talk about how Musk's pet project is the Cybertruck, and it just reeks of people with an axe to grind, because I don't believe that any of these statements are true. When you look at what CNN has to say, it's Tesla's shares plunge, wiping out $80 billion in market value. Well, put that in context, right? What's that as a percentage of Tesla's total value? Well, it's down 12% over the past days. Maybe the bigger story here is that it's down 26% year to date compared to the NASDAQ at 3.5%. And this sentence from that article also shows this axe to grind. We were dead wrong expecting Musk and team to step up like adults in the room on the call. So this is, again, an analyst with an axe to grind. So let's briefly talk about the South African elephant in the room. So back when Musk could do no wrong, we pointed out he was the single biggest risk to Tesla. That remains true today. Now, it's okay to say that he's both the world's most accomplished entrepreneur and someone whose mouth gets him in lots of trouble. Both those statements are true. One good thing about Musk and people like this is you always know where you stand with him, as opposed to people that don't say what's on their mind, like politicians. You ever wonder why so many actors become politicians? Well, that's why. Now, Musk committed a mortal sin. I don't know, this was several years ago, because everywhere you look now, you're going to find pundits being hypercritical of him. This was not the case 4 to 5 years ago. That's because he decided to dabble in U.S. politics. Now, the response of the U.S. government has exhibited the same sort of petulance that the League of Haters in the media exhibit towards Musk. They like to call him a man-child. That's code word for they're using some ideological reason to attack Musk as opposed to being objective and fair. Again, going back to that point, you should be able to say good things and bad things about this man. So we're focused today on what's happened, their guidance going forward, the commentary in the earnings call, not who said it. And as a rule, you need to be very careful about pundits who have a clear axe to grind when it comes to Tesla. So opening remarks, they had annualized car production of 2 million vehicles. You can put that into perspective by looking at the total addressable market, which is around 100 million vehicles a year. So they have a lot of potential opportunity, and an analyst had queried this in the call. They expect the storage business to grow much faster than the car business. The Model Y became the best-selling vehicle globally, as predicted, and the best-selling vehicle of any kind. That's a pretty big accomplishment. They talked about their high-output car factory in the San Francisco Bay Area. I didn't know that. I go down there rather regularly. It's a bit of a Mad Max zone at times, but it's good to see they're still operating there. FSD, so that's their autonomous driving capabilities. They released a new version 12. Complete architectural rewrite. Surprisingly here, they replace 330,000 lines of C++ code with neural nets, so AI is now actually running things. A bit scary if you ask me. They say they're quite far ahead of any other company in the world in terms of AI inference efficiency, and they say this is going to be a very important metric in the future and in many arenas. In other words, when there's a crimp or a bottleneck in supply, as you see now with GPU chips, then being able to efficiently utilize your hardware is very important. Now, other remarks made here, perhaps the most important competitive characteristic of Tesla in the future will be their manufacturing technology. He reemphasizes this again, and that's something that we've picked up on before. And while their teams are focused on cost reductions, in other words, expanding that gross margin, they're approaching the limits within their current platforms. Look here at this chart. It's remarkable. The COGS per vehicle going down over time. Wow. Somebody made the remark that Tesla's vehicles utilize more electronics than any other vehicles, and that when it comes to electronics, you can really start to realize efficiencies over time when it comes to cost. So they were probing those sorts of questions about the cars. Most customers, Tesla says, overlook the lower total cost of ownership by focusing on purchase price. That's key. So they're running marketing now and trying to educate customers on that. But when you look at a firm like BYD, they have very, very low price points, so sub $10,000 cars that they're selling into emerging markets where people genuinely want to save costs. They want cheaper transportation so they could feed their family. So that's giving BYD a big advantage. Now, Earnings Deck has a couple interesting comments here. So they believe they're currently between, now pay attention here to the language used here, currently between two major growth waves, the Model 3 platform and the next generation vehicle platform. That next generation vehicle platform is going to allow them to build that $25,000 Tesla everybody's talking about. All right, so that's what people are waiting for, because that's going to help them compete against the likes of BYD. They noted that even though they're the best-selling car globally, the cars that lead up to that are all of lower cost than Tesla. So they can actually gain by lowering their price with a vehicle at a $25,000 price point. And this statement also tells us they're between two major growth waves, and they follow it up by saying, in 2024, so this year, our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023. So if we saw 15% revenue growth between 2023 and 2022, then you can expect growth to be lower. That appears to be the reaction that you saw, which was exhibited in Tesla's stock dropping 12% over the past 5 days. They say in 2024, the growth rate of deployments and revenue in their energy storage business should outpace the auto business. So we're going to want to start keeping track of that metric where they break that out as a percentage of total revenues. When it starts to become meaningful, then your exposure is not just a car company, but also to energy storage. And there are lots of stories that Tesla's telling that justifies their valuation beyond just a car company, like Optimus, their robots. So they said here, very insightful statement, the AI technologies were developed for the car translate quite well to a humanoid robot because the car is just a robot on four wheels. Here at Nanalyze, we were trying to figure out where do we categorize autonomous vehicles. We decided in robotics, that's what they are, right? They're robots that roll around the streets. They say we have a crazy amount of compute in our cars compared to anyone else. And I think Musk made the remark that someday when cars are idle, they may actually be doing, running some chat GPT on the side, right? So they say on Optimus, interesting statement, economy is productivity per capita times capita. But what if there's no limit to capita? There's no limit to the economy. So this is just talking to the potential of this humanoid robot. Musk or someone said it has the potential to be the most valuable product of any kind ever by far. So these big grandiose statements, right? You take them with a grain of salt. We don't invest in stories. We invest in what Tesla is today, which is a promising car company, a richly valued one at that. But he says, I think the barrier, and we've talked about this, is like getting it to do something useful. So someone else on the call said that, and Musk was quick to chime in. Well, it does useful things. Well, is this a solution looking for a problem like we've seen with other robotics companies that develop these, they dance really cool to a song, but they don't do very much else. So if either full self-driving or Optimus hit, then investors should start seeing real justifications for those lofty valuations. And of course, Musk acknowledges himself. He says, I don't want to blow your minds, but I'm often optimistic regarding time. So I think it's middle of next year, this next generation platform is supposed to be spewing out these cheap cars. So that could slip, and a lot of people are critical of Musk making claims about things. He's trying to solve extremely difficult problems, and you should certainly always be critical of a management team's promises, but also go back to looking at, all right, is the core competency of their business on track? That appears to be the case, even though they're expecting growth to slow in the coming year. On FSD, Musk says, I think they don't believe it's real quite yet. He keeps saying this, right? I think that will become obvious probably this year. So let's see if that happens. I think if you're a Tesla investor, then you need to expect that these very large problems that they're solving could slip. It's important that when they do deliver on their promises, that what they've delivered generates revenue, right? So the deck that Tesla puts out, if you're an investor, you ought to read it. It's quality. So here you can see they provide this slide that looks at profitability, and you have minuses and pluses, right? So these talk about the change year over year, and I'm not going to elaborate on that, but you can see here the revenue growth itself, and as from a quarter-on-quarter and year-over-year quarterly growth appears to be stalling, and analysts in the market have taken note of that, and it couples well with Musk's comments about growth for next year. So just some comments from our side. Love the democratized questions. So they have this system where everybody goes and asks questions, and then they line up, they vote on what should be asked, and they answer those in the call first. Musk is clearly a hands-on leader with extensive subject matter expertise. That stands out in the call, right? So I think these comments, the only people not acting like adults are the analysts who do their audience a disservice by not being objective. I'll say that much. Great quarterly annual decks. I didn't see any communication problems in this call. If you've ever slept at work to get something done, you're probably going to relate to the sort of ass-busting that happens in Musk's companies. I reckon a lot of these people criticizing this call probably haven't. And whether you like him or not, you got to respect the hustle. So here's the problem for investors. If you're investing in a car company, then things are just fine. You can expect growth to not be perpetual as they ramp up this new platform and growth stalls next year. Seems more temporary than anything. The problem is that you're not invested in a car company because the valuation reflects something different. So to realize the true valuation of Tesla's shares, you need those tales Musk tells to start coming true. That may take a while. Some may be true, others not true. But remember this, and it's a double-edged sword. You're betting on the world's most successful entrepreneur who also happens to be somebody that runs his mouth a bit. Now, as Elon Musk run out of luck, people keep asking, well, guess what? The harder you work, the luckier you get. And Musk is one hardworking devil. So just to conclude, nothing in this call appeared alarming for investors with a time horizon extending beyond just a year. Be very wary of analysts with an axe to grind. There's lots of them out there. And the constant barrage of criticisms leveled at Musk and Tesla, it's actually a good thing. You always want to hear the bear case, okay? Bulls are a dime a dozen. I think before Elon Musk committed his mortal sin, that there were far too many bulls and Tesla fans out there where Musk could do no wrong. Now, few deny that Tesla is valued at more than just a car company. So we all accept that. And now we need to see some of these stories that Musk is telling start to come into fruition. The next big one being in mid-2025 when they deliver those lower cost vehicles. Now, when it comes to FSD, expect extra hurdles given Musk's relationship with the current administration. That's probably one of the biggest problems we see with the autonomy thesis when it comes to Teslas. Now he has to fight an administration that doesn't like him at all. And we have an election coming up. We'll see how that changes. And watch out for the Chinese. Musk called this in this earnings call and said, and this goes back in 2011, he said that they were not formidable at all. And he's changed that tune. He said they're the biggest challenge to automakers, and they can pretty much dominate globally with their low-cost automobiles unless there's some protectionism there. But we did this recent piece on investing in Chinese EV stocks, which talks about what Musk talked about in the call. Give that a watch. Make sure you subscribe to this channel. Thanks so much for taking the time to watch this today.